Now, one subject that many people don't know much about is ETFs, exchange traded funds, or ETNs, exchange traded notes. Now, ETFs have become very popular in the last 5, 6, 7 years. They've been around for a while, and we have almost 2,000 ETFs now around the world. And I was part of a small team of the forerunners for ETFs back in 1989. That we created the first one on a little exchange in Vienna, Austria, called the Feichtner Basket, which was based on only four stocks, because that's what an ETF is basically. The basic ETF concept is a basket. So you spread your risk. If one company goes belly up, doesn't really matter that much, or it doesn't affect the whole thing, because in some ETFs you have like 100 companies or 200 companies, depends what it is. You have ETFs, exchange traded funds. They are like baskets, and you put the companies in there, different weightings, meaning some have a higher percentage, others have less, or whatever. But there's like, you're spreading your risk, and it's actually like a fund management ETF. Now, the next step in ETFs is, of course, funds that simply only invest and trade in ETFs. That's the next little thing that could be very interesting, meaning ETF of ETFs. That sounds okay. Or a fund of ETFs. Let's stay on the level ground here. But ETFs is definitely the future for investing, because it gives the opportunity also to the retail investor to simply just buy one ETF, like if it's a sector ETF, like a tech sector ETF, or it's real estate REITs, for instance, and or financials, or retail, whatever there is. There's in every sector you can just buy an ETF, and that makes it much easier, and it can be less risk to do that, because your risks are spread out. Now, while simple ETFs are a good thing, there's also the area of leveraged ETF, which again is safer than, like, for instance, commodities trading or futures or whatever. And leveraged ETFs just give you leverage. That's what it says. A double or a triple. Direxion, for instance, produces excellent leveraged ETFs, and not every ETF is good. Not every leveraged ETF is good. So everybody has to research it, But there's, like, for instance, the Latin America ETF, a regular ETF on Latin America, LBJ, at this time. And the good thing is, on ETFs, there's not only long ETFs, there's also short ETFs. Like, so we can hedge properly or weigh our portfolio accordingly. Meaning, if we think it's going up more, we weigh on the long side, and we can hedge, if we want to, on the downside, just in case, or depending what kind of hedging model we take. So with ETFs, we can also trade oil, for instance, the USO, or natural gas, the UNG, and other products from, there's different issuers like Power Shares, or and it's just a whole new world. And ETFs, I think, is absolutely the future for investing, at least for the next 5, 10, 20 years. And I think we've just seen the beginning stages of ETFs. There's also for precious metals, gold, silver. You can trade this particular ETFs, and that makes a lot of fun. You can invest in those. When you get into leveraged ETFs, investing is questionable, because there's also a decay factor to the integral futures component sometimes, or most of the time. That's for leveraged ETFs, especially when going into triple leveraged ETFs. But you can also trade silver, gold, all precious metals, even commodities, and everything in the leveraged ETFs, oil. So there's many possibilities. And then the indexes, of course, everybody by now is usually familiar with spiders, and all those things. But you can have long ETFs and short ETFs, so it makes it very easy to short a sector or a particular group or even commodity. And on the other hand, to leverage up real fast, with the doubles and triples, and develop certain hedging strategies. So in essence, um, that you can protect the portfolio, have proper risk management, and even though there's billions of dollars going into ETFs every month or over the course of the year, in one is better than the others. We also know that certain ETFs didn't work and they're no longer around and they're liquidated. So we just want to go with the big ETFs, but there used to be the triple Q, then it was the quad Q. That's on NASDAQ, for instance, that's an ETF. And then we have also on the Russell 2000 long and short ETFs and the leveraged ETFs like the TNA, which is a long ETF on the Russell, small cap stocks. And so ETFs is its own learning curve, but once mastered, it's actually a lot more fun than stocks to trade. And the fun comes in with ETFs. Like I trade mostly leveraged ETFs, and that's only where there's high volume, But in real estate, for instance, you have the DRN by Direction. It's a leveraged ETF on REITs. It's quite interesting. And then you have also the short ETF, the DRV. But on the short ETFs, leveraged ETFs, you have to be very careful because there's an extra decay factor, especially in a market that moves up. And those ETFs you don't want to hold too long. They are really trading instruments or hedging instruments and so forth. But like in silver, the regular ETF is the SLV, and the leveraged one right now is the HEQ. And well, why do I say currently? Because sometimes the symbols change and the issues, there's new issues coming with better products or and so forth, But on the silver long, you have the HEQ. On the silver short, you have the CSL, ZSL. So you could do short. So when silver dropped, you jumped into the CSL and it was cool. Or then you have, for instance, for oil. There's the USO is the long oil ETF. And at this time, there were other ETFs before, but on the leverage side, you have when oil goes, for instance, right now in the trading range to 105 or so, you buy the DTO, and which is a leveraged short oil ETF, which goes up when oil goes down. So it's a cool thing. And then in the financial sector, we have the popular FAS, which is a levered long ETF for the financial sector, and the FAZ, which is a short on the financial sector. Now, the key to leveraged ETFs is volatility. So if we don't have any volatility, there's even ETFs on the volatility on the VIX, So far, I haven't seen them to perform too well, in either way, but there's all kinds of products. Like we said, almost 2,000 ETFs, and there's now the leveraged ETFs, and I think they are very interesting. But the thing is, when there's volatility, the leveraged ETFs, they can jump like 20% in a day or trade in a range of up to 30% a day or more. And that's ideal for traders, of course, because and you can buy in big volumes, If the thing sells for $40, you're in and out with 500,000 or a million shares, like taking a walk in the park. It's really easy. It depends all on volatility and the volume traded in a particular ETF. By now we all know that, like John Paulson and others, George Soros, they've been investing in the GLD, which is the Gold ETF, the Basic Gold ETF. Of course, there's leveraged ETFs from Direction, for instance, the Nugget, the NUGT. That's a triple leverage on the gold. And on the long side, on the short side, it would be DUST, D-U-S-T. And again, those are just the symbols right now of this recording, because they may always change and there might be other issues that come out with new products. But I think we are only in the beginning phases of ETFs. And I think for the general public who has no clue about ETFs right now, the retail investor, because not even many financial advisors know about ETF, how they work and what they are and so forth. And not even talk about leveraged ETFs, that's especially. But I think there's a lot of opportunity that we can use in investing in this regard. And It's just exciting the issuers that come out with new products. There's plenty of issues, by the way. Like we said, not everything works. There's currency ETFs, and there's the commodity ETFs, there's the sector ETFs, there's the you know whatever you think. There's basic ETFs on cotton, on sugar and corn, and even on cows, basically on livestock, and so there's many opportunities that have not been explored, and many of those ETFs don't have high volume, so you're not interested. In general, I only say, and then the index ETFs, that's what I like most, or the leveraged index ETFs, they are very good, and it's actually not that hard to predict the market. You can do scalping, and which works with those ETFs. Like I said, even tens of millions of dollars can be moved rather quickly and without too much problem, depending always on the volume in a certain particular situation. So eventually, anyone who is interested in ETFs has to get familiar with the source, with ETFs in general. But just like any financial instrument, we have to learn about it, get comfortable with it, and just explore what's in it. But there's country ETFs, like we said, there's also ETFs on wood, coffee, whatever you can think of, and they'll be more created. And so there's vast opportunities in this segment of investing, and we think even ETFs can be much safer than single stocks, because single stocks, they can plummet 60, 70, 80, 90% in a day, bad earnings or whatever, or bankruptcy, or some weird decision, or a lawsuit, whatever, and stocks can plummet, or it's just crazy. And then the ETF gives you the protection, so you just have to be right in the sector, in the trend, in the overall market, or in a certain segment of the market. And actually, I find it easier to do that. And it's of course, the good thing is also you can do shorts. If you think the housing market is overvalued now, it will be easy to short in a sense, or commercial real estate is overvalued, would be easy to short. But you have to be careful on the leveraged short ETFs, because they have also decay factors. Most leveraged ETFs do, and there's a difference: regular ETFs and then the leveraged ETFs, and there's double and triple um, um, leveraged ETFs. So certain ones that have higher volume are easier to trade, and while regular ETFs might be good for an investment, for a longer period of time, and longer, I do mean weeks, months, in certain areas like real estate or whatever, and like the IYR, that's on real estate. But the leveraged ETFs are usually short term, and they're more like hedging and for trading purposes. And especially when there's volatility, these items, these products are just excellent because of the huge range, and if you're going for a few points, you can really move some money and really cash in on a lot of profits. You have to be an expert, you have to study them, not each one is good, and they change. Thank you.